Great. So question 6. Good exam technique. Check the required.
Prepare Omar's trial balance at the 30th of November 2014 after taking into account the transactions that took place during the month of November. Note only a trial balance is required.
Very good. Okay, so important, we need to draw up that trial balance, but adjust it. Okay, so let's go down the list and let's recreate it. So trial balance for Omar. Okay, 2 dots. Obviously, we're going to have details. Did they give the split here? No, they didn't. Okay, let's improve it. Okay, so let's write down financial position accounts. That's correct. Financial position accounts.
At 1st of November?
Yeah, you should. I'm not, but you can. Okay, at 31st or 30th November 2014. Yeah, obviously the whole heading would be best to write out everything. Okay, and then once you've done that, financial accounts section, financial position accounts section, like this. And then we need a debit here, DR, CR. Like that. And then I'm going to draw those sections up. Alright, so I'm going to leave some space and I'm going to write down nominal accounts section. Okay, and then we can complete the exercise. Alright, so let's do 2 things at once. While we go through the trial balance, you tell me what those things are, and then we'll record them in the actual trial balance as well. You don't need details. Yeah, it's not a journal. No details. I'll just write that out.
So what would that be?
Financial position account section, nominal account section. Okay. Remember, trial balance is looking at balances from where? The general ledger. Okay, so it would just look like it. It would look exactly the same as this. Same as they've got it here. Okay, we're just using this example and we're fixing it. Okay, taking the adjustments into consideration. Right, they said only the trial balance needs to be drawn up. That's what they said. 22 marks just for the trial balance. Right, so what I'm going to do as additional is next to this, I'm going to show workings. They didn't ask for this, but I'm going to show it just so that we can see what the actual adjustments are when we look at them. Okay. Right, because that's interpretation, that's understanding.
Bank overdraft.
Great. Where does that go? Financial position or nominal?
Financial.
Financial position. Good. Let's write that in. Bank overdraft. In brackets, let's put the amount in. How much? Okay, just be careful. Read the correct amount. Let's use the ruler.
1480.
Yeah, just so that we don't make a mistake with balances. Okay, 1480. 1480. Perfect. What's next?
Capital.
Capital also goes here. Perfect. Capital bracket.
103560.
103560. 103560. Perfect. Next.
Cash also.
Cash goes here as well. Good. Cash brackets. 4440. 440. Okay, next.
Discount allowed.
Okay, where would that go?
Nominal.
Very good. Okay, it's an expense. Discount allowed. Open brackets. Amounts.
1320.
1320. Great. Next.
Discount received.
Also here. Discount received.
1890.
1890. 1890. Great. Next.
Drawings.
Drawings. No.
No, sorry.
Yeah, drawings is a owner's equity account, so financial position. Drawings, how much? 37320. Perfect. Next.
Furniture and equipment.
That goes here. Furniture and equipment. Brackets, how much? 180,000. Okay, great. Next. Operating expenses, nominal. Operating expenses is an expense. 45,360. 45,360. 45,360. Yes, correct amount. Good. Okay, what's next? Purchases goes down here as well. Purchases is an expense in brackets, amount. 578. 270. Great. Returns inwards. Returns inwards would be nominal. Okay, returns inwards meaning it's a very, very weird way of describing what? Returns from who?
Customers.
Very good. Okay, returns inwards means returns that are coming from our customers. Okay, which would actually be called what? Purchases returns. No, no. Sales returns.
Open.
Yeah, sales returns.
It's open. The key's in there.
Sales returns, yeah. Okay, so I just want to put a note here. Returns inwards / sales returns. Returns. Okay, that's actually what you would call it. Okay, returns inwards is sales returns.
And then returns outwards.
That would be purchase returns. Yeah. So they're just like really weird ways of describing something basic. Right. Returns outwards. You can even look at their balances. See, returns outwards is a debit or a credit. It's a credit. See, that's why it's a purchase return. Purchases returns. Okay, so the only reason why I'm doing that is just to revise. Okay, because if you don't know what something is, then it's problematic. Okay, because we need to know what these things are. So a sales return, remember, a sale would be the income. So a sale return would have been an expense. So you'd expect a debit balance. Oh, I didn't put the amount in here. I need to go back. Returns inwards, how much was it? 4890. 4890. And then the other one? 5130. 5130. Perfect. Okay, then sales is an income. 732, 340, 340. Okay. Trade payables. All right, you've got a few different ones, so we need to put them in separately, just to keep it specific to the question. Trade payables. Who's the first person? LDZ. LDZ. Brackets. How much? 1.5. Okay, good. Next, M-chin, okay, trade payables, M-chin brackets, how much? 32. Okay. Okay, now we've got receivables, alright, so trade receivables, for who?
Old Bridge Retail.
Old Bridge, okay, Old Bridge, brackets, how much? 2.8. Right, and then trade receivables again, but for Peterson. Okay, and the amounts, what was the amount? 1.7. Great. Okay, so those are all the easy marks. Right, knowing what things are, putting them where they need to go. Now we need to do what? Adjust. Right, we're adjusting what we've got here. Okay, so working wise, I'm going to show the working on the right. We'll discuss it. Okay, but you weren't asked to do that. Okay, you were just asked to correct this. Right, they said only draw up the trial balance. Okay. Right, so let's go and look at each of them separately. So let's start with number one.
The first one says cash receipts for operating expenses. So we have plus 380.
Cash receipts for operating expenses. That's a very, very, very strange. Operating expenses. Why would you receive operating expenses?
It would be cash payments, eh?
Yeah.
But maybe it's the cash receipt we're getting.
Okay, let's read the whole thing.
No, it's just there. That's all.
Oh, is it just that?
Yes.
Is the second part not part of it?
No.
Okay. All right. So then, if that's it. Yeah, why would you receive from operating expenses? That doesn't make any sense.
But operating expenses is an expense, so I'm just going to add it there. Because maybe they're talking about the receipt that you get after you've paid for expenses, like the duplicate receipt that you get.
Okay, that's possible, but then you would get the original, possibly. Okay, so fine. I agree with that interpretation, but that's a little bit of a questionable one. Okay, so I'm just going to put asterisk number 1, additional expense. Okay, I'm just going to say that. Alright, so I agree with you. You would affect which two accounts though? You would affect your operating expenses, that would have been debited. So it would have been plus, how much? 380. And then what other account would have been affected?
Cash, because it said cash receipts. So.
Correct. So cash would have been,
380.
yes, negative 380. Good. So we've done that one. Next.
Okay, then on the third, we got an invoice from LDZ Limited for goods for resale, so we purchased from them, less a discount of 33 and a third trade discount.
Okay, it's a trade discount, so we only record the net amount. Alright, so number 2, asterisk, number 2. Yeah, this was a purchase. Purchases of 4.5 less 33 and a third, hey? Yeah, 33,33333 recurring percent discount, trade discount. Okay, with the trade discount, you immediately take it off.
So it's 3,000.
Yeah, so 45,000 times 0. It is 3,000, 100%. Okay, so if I'm purchasing more from a creditor, okay, who was this creditor? LDZ. Okay, so LDZ, where's LDZ? Here, we're going to add. Okay, plus.
And it said invoice, so doesn't that mean it's on credit?
Correct, that's correct, definitely, yeah. Right, so what other account is going to go up? What did I buy from them?
Inventory.
I bought goods. Where's my inventory account?
Purchases, yeah.
Purchases, good. So that's going to go up. Plus 3,000, nice. Okay, that covers that. Good, next.
Paying in SIP. Check received from old retail unit in settlement of the account at this date less 5% discount. They don't give you any.
Okay, so then we need to look at their account. So
they settled their account.
Yes.
So here's Old Bridge.
Yeah, there's Old Bridge. Okay, so Old Bridge owed, okay, who owed who? They owe us, it's trade receivables. Alright, so number 3, asterisk. Okay, how much do we actually receive? Well, receipts from a debtor. Okay, the amount that they owed us was 2,800 times. How much was the discount?
5.
Was it 5%? Okay, great. So 5% equals, let's check the discount. 28 times 0.05 gives you 140. Good. So the net amount, so you would have received, yeah, received equals, let's see, 28 less 140 gives you 2660, 100%. Good. Okay, so what is this account going to go down by?
The full amount.
Perfect. Minus 2,800. Okay, and then bank's going to go up or down?
Up.
Good. Okay, where is our bank? Okay, was this?
That's the first one.
Yeah, was this a
check received?
It was a check, eh?
Yes.
Okay, so if the check is going to affect the bank overdraft. Yeah, not the cash. So just be careful with that. Bank overdraft. Okay, the bank overdraft would have gone up or down. It would have gone down because it's a liability. Sorry. They're paying off, yeah. So it would have been minus.
No, but they owed us and they paid us. So wouldn't our bank increase?
Our bank would increase, but this is the bank overdraft. Yeah, so bank overdraft represents a liability.
Oh, okay.
You see what I'm saying?
Yeah, okay.
Okay, so the liability is decreasing. It becomes an asset. Okay, so the bank overdraft would minus the amount we received, 2,660. Okay, then discount allowed here, that's going to go up, plus 140. Great, there's another one.
I've got 2 140s, is that right?
No.
I think I already did it.
Yeah, I think you already did it. Okay, good. Okay.
Then credit note on the 8th, received from LDZ for goods purchased on the 3rd of November, not as ordered, less 33 and quarter trade discount.
Okay, so that's a return. That would be a return. Which return? Well, LDZ is a trade payable to creditors. So it will be returns out of purchase returns, 100%. Good. Okay, we just need to work out the amount though. Okay, so asterisk number 4. This is a purchase return. Okay, what did they give us?
330. What are you looking for?
330, yes. I'm just checking the discount as well.
33 and a quarter and a third percent is 110.
So 330 times 0. That gives you the amount that was returned. 220, good. Okay, so 220 is being returned. So your returns outwards is going to go up.
Plus 220.
Plus 220. And your LDZ is going to go down. Yes, 220. Good. That's another one.
Okay. Till roll, cash sales for 2460.
That's easy. Cash up plus.
No, it would be sales up.
Both, yeah. I'm just looking at cash first, but it's fine. You're looking at sales first.
2460.
Yeah, 2460. So cash goes up, sales goes up. Both go up. 2460.
Two accounts for Omar withdrew money for private use.
That's it.
720.
Okay, so drawings will go up.
Plus 720.
Plus 720. What did he take?
Withdrew money. It didn't say cash or.
Check counterfoil, so it's going to affect the bank. Okay, so bank overdraft would have gone up because it's an overdraft. It's a liability. Okay, so if it's a liability, the liability would have increased if they took out more money. How much? 720. Great. Okay, complete. Next.
Okay, now it just says letter. Copy of letter sent to Old Bridge retail units stated that the discount claimed by them when making payments on the 7th of November cancelled because payment had been after specified limit. So we have to cancel the discount.
Yes, okay, so where's the discount we had earlier?
5% cash discount.
Here's it.
Discount allowed, it was 140.
Yeah, there's my discount, eh? Alright, so the 140 needs to come off, so then just minus it, that's easy. Minus 140, and then add 140. Where's that minus 140 we had earlier? The 266. There, Old Bridge. The 288, the 28. Okay, so Old Bridge is now going to go up. Okay, plus here, 140. Great.
Okay, on the 17th, invoice sent to Peterson stores for goods less 20% trade discounts.
That's easy.
So we bought from them, or no, they bought from us.
It's an invoice. Yeah, you sent it to Peterson. Okay, Peterson was a debtor. Okay, so they're going to owe you more or less.
No.
Good. So add.
Plus 2450.
Yeah, we need to do working. Okay, so this is number asterisk. Peterson 22450 times 20% discount. 20% discount. Equals the net amount of, let's double check, 2450 times 1960 is correct. So Peterson's account is going to go up by 1960. Good. Okay, what else is going to go up?
I don't know.
Sales. You sold.
Sales.
Yeah, plus 1960. There's the other half. Every debit has a credit.
Yeah. Okay, cash banked 1,800.
Okay, so cash banked. So cash is going to go down. Good. Minus 1800. And bank overdraft. The bank overdraft will decrease. Yes. So it'll go minus 1800. Good.
Okay, invoice for additional equipment for business use received from Diva Office Supplies. Okay, we don't have that. Invoice number, okay.
Is this cash or credits?
Invoice, so credit. Received.
But an invoice could be cash, eh? An invoice can be given for
It
both.
doesn't say that. Invoice for additional equipment for business use received from Diva Office Supplies.
Okay, I would assume this is credit, but we don't have Diva here. You see that? So we're going to have to add Diva.
So
Alright, so trade payables, yes. Trade payables, 2 dots, diva, what's a diva? Yeah, diva with the E. Okay, brackets, how much? There's no discount, no nothing, great, so that's easy. Okay, perfect. Oh, and what else? Okay, we've got half, we need the other half. What do we buy?
Furniture. Yeah.
Equipment.
Yeah.
Equipment, yeah, furniture and equipment, that's going to go up. 1460.
60.
Yes, okay, next.
Credit note sent to Peterson stores for goods damaged in transit. 20% trade discount.
Alright, so Peterson was a debtor. So this would have been a sales return. So sales returns is going to go up. How much did he return?
So that would be return inwards, right?
Return inwards, yes. Because it's a customer.
150 minus 20% discount.
150.
So it'll be 120. Plus 120. And then Peterson here would be minus 120, right?
Yeah, just double checking. 0.8 is 120, yes, okay, good. Okay, plus 120. So return inwards, a sale return. A sale return is a.
So then we would minus it from Peterson's account.
You would subtract, yes, because Peterson's the one returning. Good. Minus 120. Great.
25th. Check counterfoil paid. Mchin Ltd, the amount due at this date, less 5% cash discount. Okay, so where's Mchin? So
3,200, yes.
Times 5% gives me 32 minus 160.
This was the full settlement, eh?
Yeah. Okay, so it would be here minus 320, 3,200, and then
5% discount or 10%?
5%.
Oh, they gave you the discount, didn't they? Oh, no, they didn't. They asked you to work it out. Okay. What did you get? 160?
Yeah.
Good. Okay, so that's the discount. Then the net amount. Net amount is 32 less 160. Right, so 3040. Okay, so Chin is a payable, so it's a liability. So we would have had to have paid what? The 3040. So bank overdraft is going to go up because we would have paid it. 3040. Okay, we received a discount of 160, which is a discount that we receive, plus 160. And then Chin's account decreases totally, minus 32. No more liability.
Okay.
Last one.
Pay in counterfoil. Check received from Peterson stores in settlement of their accounts at this date, less the cash discount of 110.
Okay, so where's Peterson's account? Okay, Peterson's account, we need to work out their balance. Okay, so I'm going to highlight this.
1700.
Yeah, we need to work out Peterson's balance. Peterson's balance.
It's 3540.
It is 3540. Good. Less 110. Good.
3430.
Yes. So that's what the net amount.
Yeah.
Perfect.
So bank overdraft was decreased by 3%.
Well, Peterson is a debtor, so you're getting money. So bank overdraft would decrease. Yes. So minus 3430. Your discount, you're allowing a discount that'll have gone up, plus 110. Okay, and Peterson's account would have been 0, so you would have subtracted 3540. Okay, does that make sense? Yeah. Great. Now all you need to do is literally this, tally up. So bank overdraft, if I add up all of that, I get minus. Okay, notice though, bank overdraft, I'm going to highlight this. Okay, if bank overdraft is a negative, do you agree the bank overdraft has now become a positive bank amount? Alright, so this actually needs to be bank, not bank overdraft. Does that make sense? Okay, so what I'm going to do here is I'm going to add an extra line just to show that. Alright, so this I'm going to make 0. Okay, so no bank overdraft. and then that is going to go down because now we don't have an overdraft, we actually have an asset. Okay, and then an asset would be this, the 2650, and I'm going to call that bank
Debited.
Debited, definitely. Okay.
Okay.
All right, capital we just put in as is, 103,560. Okay, cash, let me do the adding here. 720. Drawings, let's see what we get there. Drawings is that. Furniture. Trade payables. Payable, liability. That's 0, obviously. Receivables, that would be a debit. Gives you that. Peterson's account, I think it would have been 0, right? Mm-hmm. Yeah, but let's just check. Yes. Trade payables, Diva. Payables is that side. Okay, happy with those?
Yeah, I'm going to do it afterwards because I
no
can't
problem.
see nicely.
Okay, no problem. Okay, then the last bit at the bottom, discount allowed. Discount allowed is an expense, so add up. Discount received is an income. Discount received is an income equals that. Operating expenses is an expense. Copy paste. Purchases is an expense. Okay, returns inwards is a sale return. A sale return would be an expense. Ooh, paste, undo, copy. Okay, gives you that. Returns outwards is a income. Purchase return, paste. The last one, sales, is income. Equals, paste. Alright, so now the last bit we need to do is just tally up, and then we need to see, does this add up? If it does, then we've done the corrections correctly. Copy, paste, 100%. Okay. Alright, yes. Great, so that's it. So that's
Can I just see that? Sorry.
Sure. Let me just shrink that. Okay. Alright, so yeah, those are the balances that we've got for those accounts for that particular month. Okay, just remember there's no balance for the bank overdraft. You just leave that out because it's become a bank asset. So yeah, really good. Your adjustments are really good. You don't stress with the adjustments, which is great. That's what normally students struggle with, is adjusting things. But you seem to know that very well, which is great.
Thank you.
Okay, then I think I'll give you that last exercise for homework, and then we can carry that on. We can carry on Wednesday. We'll just check it. It's very short. It's more theory than anything. And then we'll do one or two more chapters. I'll give you the review of all the assignments. I'm still busy going through some of them.
Okay.
I'll give that back to you on Wednesday.
Cool.
Well done. Good efforts.